to 4.6% in Q1 of 23-24 was in line with the projections set out in the June MPC meeting. There was pickup in headline inflation to 4.8% in June due to an upturn in food inflation. On the positive side, inflation excluding food and fuel, that is core inflation, has softened by more than 100 basis points from its recent peak in January 2023. The month of July has witnessed accentuation of food inflation, primarily on account of vegetables. The spike in tomato prices and further increase in prices of cereals and pulses have contributed to this. Consequently, a substantial increase in headline inflation would occur in the near term. Going by the past trends, vegetable prices may see a significant correction after a few months. The prospects of Kharif crops have also brightened thanks to improvement in the progress of the monsoon. Uncertainties, however, remain on domestic food price outlook due to sudden weather events and possible El Nino conditions in August and September. August and beyond. Global food prices are also exhibiting a hardening bias on renewed geopolitical tensions. Crude oil prices have firmed up in the recent weeks, and its outlook is clouded by demand-supply uncertainties. Assessment of the future trajectory of inflation is a continuous process. We have a choice to modify our inflation projections in every meeting of the MPC if warranted, in the interest of better guidance, or avoid frequent changes and revise them only on fewer occasions for simplicity of presentation. Given the continuing uncertainties, our latest CPI inflation projection for 2023-24, assuming a normal monsoon, is revised to 5.4%, with Q2 at 6.2%, Q3 at 5.7%, and Q4 at 5.2%. Let me just repeat these numbers for better clarity. CPI inflation projections for 2023-24, that is for the current year, assuming a normal monsoon, as I have said, is revised to 5.4%, with Q2 at 6.2%, Q3 at 5.7%, and Q4 at 5.2%. Further, CPI inflation for first quarter of the next financial year, that is 2024-25, is projected at 5.2%. The risks are evenly balanced. Headline inflation projection for the second quarter of 23-24, that is, for the months of July, August, and September this year, has been revised up substantially, primarily due to price shock from vegetables. Given the likely short-term nature of these shocks, monetary policy can look through high inflation prints caused by such shocks for some time. The frequent incidences of recurring food price shocks, however, pose a risk to anchoring of inflation expectations, which was underway and which has been underway since September 2022. The role of continued and timely supply-side interventions assumes criticality in limiting the severity and duration of such shocks. In such circumstances, it is necessary to be watchful of the emerging trends and the risks to price stability. We have to stand in readiness to go beyond keeping Arjuna's eye to deploying policy instruments, if necessary. I reiterate what I said in the previous June policy statement. Bringing headline inflation within the tolerance band is not enough. We need to remain firmly focused on aligning inflation to the target of 4%.